Good morning. Larry Edelson here with my Uncommon Wisdom video update for Monday, November 28th. First off, I hope you had a great Thanksgiving holiday and weekend with family and friends. Thanksgiving is one of my favorite holidays, so you can be sure I enjoyed it. But now it's back to work and to the markets. One caveat before I get started. Due to the holiday and the Weiss publishing schedule, I had to record this market video update on Tuesday, the 22nd, just about a week ago. Not to worry though, the markets were largely closed on Thursday and Friday of last week. So in terms of trading action, the content of this video is really only about one day behind the markets. Nevertheless, important trends don't change in a day or two, so everything I cover with you today is still relevant as you view this video. Some of the charts might look like they're missing a day or two of price action, but the comments I give you won't be affected by that. The most important comment I can give you today is that all of the markets and trends I've been covering for you are indeed turning our way. In gold, we're seeing the breakdown I expected accelerate. Gold has now given me two additional sell signals by closing below 1,754 an ounce and 1,696 last week. We may see a bounce, but everything points lower now for gold, with the next major support not coming in until the 1481 level, followed by 1457. I fully expect we'll get to those levels and soon. Let's turn to the gold chart now. As you can see from this chart, gold has broken back down below the uptrend line, a bearish technical indication. And you can also clearly see that there is not much in the way of technical support until the $1,500 mark. However, that support there at $1,500 is not very strong. So I do expect gold to break eventually below it. Now let's take a look at the silver chart. The daily silver chart looks pretty similar to gold. Silver has now broken back below a key technical support level, and it's also given me two system sell signals. However, the next major sell signal in silver will occur when it closes below the $29 level. That will confirm a move in silver down to $25 and lower to at least the $23 level. So as you can see, I remain short-term bearish, both gold and silver. Now let's go to the chart of the Dow Industrials. In this chart, you can clearly see the breakdown last week in the Dow Industrials. Naturally, there will be some upcoming bounces, but overall, the Dow should now head lower to the 10,500 level. And once 10,300 gives way, my forecast of Dow 9,000 will be confirmed. And now, last but not least, the US dollar. Here's a chart of the dollar index. As expected, the dollar overall is rallying, though largely against the euro, as it continues to implode under the weight of the European sovereign debt crisis. The dollar should move up to above the 80 to 81 level on the index here on this chart, and then we'll have to reassess the dollar, because we need to keep in mind that the dollar is in a long-term bear market, and this rally in the greenback is merely temporary. Naturally, what we are experiencing right now is a short-term wave of disinflation caused by the European sovereign debt crisis and investors' flight to the safety of liquidity and cash. It's also being propelled by the supercommittee's failure to get anything done on the budget here in the United States, and to some degree also by the failure of the broker MF Global, which has caused quite a bit of liquidation in the commodity markets. We're going to see more of this kind of action with an overall bearish bias in the weeks and months ahead. But do keep in mind that we will also see the opposite reaction occur when the sovereign debt crisis hits the United States full tilt down the road. Till next time, this is Larry. Stay tuned and best wishes as always.